Hi, I'm Shakti Priyan. As part of my earlier video on financial tools I am using, I briefly touched upon credit cards there. So, as part of this video, we will look into how I use credit card before getting in there. What is a credit card? What are its usages, risk, and smart practices I am following there. We will look into this video. I am pausing for the disclaimer. Let's continue. As part of this video, we will look at what is a credit card, what does it mean, how does it work, and we will look at my credit card usage, where I am using it, where I am not using them, and how I am managing multiple cards, and how we can protect your credit card, and what is the credit score impact of using the credit cards, and a summary at the end. So let's look at the credit card. Credit card is essentially a payment card provided by various financial institutions and banks. They allow us to borrow our money, right, and we can make purchase using them, and now, right, we can make purchase now and pay them later, right, up to the set limit that is available. So essentially, it's a unsecured loan the financial institutions are giving to the individuals, right, and with various conditions. So these are all the benefits of the credit card, right? There are like various welcome benefits are there, and credit cards offer cashback. Either they credit to the bill or they credit it to the wallet, and the spending on the credit cards earns reward points. Reward points can be redeemed for vouchers, which can be used for travel, shopping, and etc. There can be a launch access either in India and global level, right? So that credit card offer, and they can also act as a emergency liquidity. In the other video how I am managing emergency, I described in detail about how a credit card plays an important role there. And also credit card comes up with various seasonal offers and festival discounts. Credit cards also offer zero cost EMI or some EMI offers available up to 50 days of interest free credit from purchase date. So these are the benefits of using the credit cards. So this is a class of cards. Different cards provide different benefits. So this is one class where there is food delivery app providing a cashback directly into the statement. The second one, Regalia Gold, it's a mid tier, slightly premium card, and where it offers various benefits, welcome benefits, quarterly benefits, and milestones yearly as well. And it can be redeemed for various vouchers. And the Amazon Pay is one where you get 5% discount for the purchases we are making on Amazon when you are a Prime member. And this class of card exists for other like marketplace as well, right? And there is one from ICICI Bank where I'm using this Make My Trip. Especially I used it for this forex transaction where it had a lowered transaction markup fee compared to the other cards that I was having. And these are the major networks that are there: Visa and Mastercard, which are global companies, and RuPay is the Indian one where we are trying to offer a lower MDR part of that credit card network. So credit cards, typically merchants pay 1 to 3% to the banks, card network, and payment processors for each transaction we are making. And banks pass back 1% as a cashback or various reward points and so on to the customer who is spending on them, right? And merchants slightly raise their price to absorb this MDR that is happening. So bill is generated monthly on a specific date, say November 28, and payment due is n days from bill generation. Let's say 20 days from the bill generation, which is December 18. So these are the downsides of credit cards, right? Banks offer credit cards with higher limits. They offer lifetime free credit cards and first year free credit cards and so on. And so this is like inducing the customer to spend more, right? That directly leads to MDR income from the bank and more chance of EMI usage, right? There is like EMI is again a steady income to the banks. Higher interest when the customer is not fully paying the bill, right? That's essentially when customer revolves the balance, and it has a very high annual interest rate going from 30% to 48%. So missing full payment has a massive cost implication, and it will also impact the credit score, right? And even small outstanding becomes expensive in months, and the interest applies to the entire outstanding amount from the transaction date if the full bill is not paid by due date. And so minimum due trap, right? Paying only minimum can keep you in debt for years. So let's look at who should not use the credit card, right? So if this list describes you today, avoid credit cards until habits change. You cannot control impulse spending. You don't pay full bill every month. You miss due dates. You rely on credit card for daily expenses. Already have heavy loan EMIs. So where do I use credit cards, right? So any merchants with a card machine, I default to using credit card, and all online purchases, annual and recurring payments such as insurance, mobile recharge, broadband, OTT, etc. Pretty much wherever is like credit card is accepted, I'm using that. Except these three, four cases, right? One where ATM withdrawal, which is strictly a no because the interest starts immediately. So local and small vendors who don't accept credit card, or the payment has to be done remotely. Let's say they are doing a home delivery and things like that. So that is where I couldn't use the cards. And then there are certain vendors or merchants where they go and pass this as an additional amount directly to the customer, right? So those are the places where I am not using them. And petrol pumps, especially where they have a 1% fuel surcharge, and with the GST and so on, it comes effectively to 1.18%. There are like some cards refund the surcharge, but not GST, right? And so categories with no reward points, there are certain categories in certain cards doesn't have rewards to them, so I don't use them there. And how I am using it, right? There are like multiple things. You can use your credit card via smartphones. You can use it via your smartwatch and UPI as well. So credit cards can be linked to devices, for example, Samsung Wallet or Google Pay, as an option where you can go and add your credit card into the mobile. So you don't really need to carry the physical card. As long as the card reader machine is having this like touchless symbol, it will work. And so essentially this enables me to share the same card across the family members, right? And one person will have the card, other person will have the card in the mobile phone, and so on. Rupee cards can be linked for UPI payments, and some credit cards have UPI ID. For example, ICICI Bank offers a UPI ID for all the cards. So if you have to pay the bill, you just have to send the money to that particular UPI ID. So how I am managing multiple cards, right? So all cards are synced to the same billing date, and all of them are paid together on the same date, right? At the start of the month after the salary is credited. Add-on cards can be like added to a credit card and shared among the family members. It can increase the total spend, and that will lead to better rewards. And certain cards, I'm using it for a specific purpose. So there is a usage isolation that's happening. And also with the add-on cards given to the family members, the launch access is shared among them. So you have to track your expiry points and ensure that what are the reward points you have accumulated is redeemed and so on. And debit cards are rarely used. I use them mainly for ATM trial. So looking at international usage, right? So when you do an international transaction on the card, there is a forex markup fee added by the cards, which is typically it's like 3.5% on regular debit and credit cards. And with 18% GST, it becomes close to 4.13%. So each transaction you make, you pay extra 4.13% on top of that for the forex and the tax on that, right? There are certain cards offer a lower forex, and there are certain forex cards which are offering 0% markup fee, and there are no GST on that, right? So you can explore these options when you want to do international usage. Forex cards are like essentially prepaid instruments which offer loading them with foreign currencies, and we can use it as if without any daily fluctuations in the values and so on. And they often charge markup and currency conversion GST there, right? And there is no additional forex markup fee per transaction. And it also comes with some launch access for international terminals in India. So let's look at how you have to protect your card, right? So these are like four transaction messages which I got in my mobile, right? So from Feb 22 till March 20, right? Various amounts, and so all of them got declined. So because all of why this is good, right? Because all of these four transactions are fraudulent transactions, right? And I was not making the transactions. It was all fraudulent transactions that were happening. So international usage was disabled, and no money was lost in this case, right? So that's why it's important that you have to use appropriate card settings. So in this case, to backstory to this, right? One of my family member traveled abroad. I shared my card to him, and he used it somewhere. And after he came back to India, and after few weeks, this started happening. So after he came back, I just turned off the international transactions on that particular card, and it prevented all these four fraudulent transactions from happening. So these are the things I follow to protect my card, like set a lower spend limit as required. Certain cards offer, though the credit limit may be higher, you can set a lower spend limit as well. Not available on all cards. For example, ICICI offers this spend limit where you can set a lower limit than the credit limit, and you can turn off the international spending when not in use. Right? I would strongly recommend this. It comes by default; it's turned off, I think now. So you can also set limits for merchant pay, tap and online, and most importantly, disable ATM so that it can never be used for ATM, which will run into a larger interest and so on. And one more important point is avoid handing over card to anybody. Ask them to bring the machine, or you go to where the machine is. Right. And also, credit cards offer built-in protection. Fraudulent transaction can be raised to the bank, and that can be reversed as well. But it needs to be acted upon immediately, and like we have to provide details required by the bank for that to happen. So, what is a credit score, right? Credit score says how credit worthy a particular individual are. So, why it matters, right? So higher the credit score, you get cheaper loans with a lower interest rate. You get higher limits on the cards. The chances of getting higher premium cards are open, and faster approvals, right? And impact for late payment, credit score drops minus 52, minus 150, or even more based on the late payments that are happening. And it's getting marked in the credit history saying, okay, this many 30, 60, 90 plus days overdue, and it stays for a longer time duration. Some of the credit score models, payment history is more like 35% of the score computation, right? So it's very important that we keep our payment history clean. So you have to protect it by paying on time, either manual or auto pay, and never carry balances from one month to another, right? And also another important point is keep credit utilization low, ideally lower than 30% or so. Summarizing it, earn rewards on spending, spend only money you already have, pay 100% of the bill every month. Rewards work only when debt isn't carried. Thank you for watching my video. If you find this video useful, please like, comment, share, and subscribe for more videos.